Welcome to the latest episode of FUMO, Future Money, with Gaurav and Ronit. In today's episode, we have an old friend and special guest, Ken Chapman. Ken, welcome to the show.
Thank you very much, and thank you for the invitation to be on the show. After serving in the U.S. military, I have 20 years of capital markets experience, and I've worked both on the buy side and the sell side. And I've worked for a number of firms, such as J.P. Morgan in investment management, Bank of America in equity derivatives, Bridgewater Associates, which is the world's largest hedge fund, and also BNY Mellon. In 2018, I left that behind and moved from TradFi into DeFi. And at that point, I had a number of coworkers and dear friends that tried to talk me out of it. Actually, even did a tough love session where they told me that go get a sports car, take a trip around the world,
You had an intervention. You had crypto intervention.
I had an intervention. No kidding, tough love session.
Go get a sports car, Gaurav.
I know. I'll do my Ferrari crypto story again.
But I went ahead and went into crypto anyway, and started my own company and got involved with my first startup, CryptoFuse, and that company was going to float an ICO in 2018. Also helped the company launch at the London Blockchain Expo in 2018. Put the company through the Wharton Entrepreneurial Accelerator, where it was one of the top companies as far as the business and pitch deck or pitch competition. And the company had a great team, great product. But just weeks before the ICO, the SEC came out with their guidance. They were applying the Howey test. So we put the brakes on that because in the United States, prisoners wear orange, and I would look horrible in prison orange. And because of that fact alone, we decided not to move forward. And so fast forwarding, I went to Wells Fargo and led initiatives for cryptocurrency and tokenization across the company, and which included repo or repurchase agreements and a number of other products. One of which was looking into how the bank or how Wells Fargo would solve for custody for its large corporate customers, and the looked at a couple of solutions. One was if Wells Fargo could solve for it itself, or if Wells Fargo would partner with another firm, and so ended up looking at partners, and looked at every possible partner in the industry, and ended up choosing Anchorage Digital because they had the same regulator as Wells Fargo. And as you know, the Anchorage Digital is the first nationally chartered crypto bank in the United States, and it's still the only nationally chartered crypto bank in the United States.
I did not know that. That's super interesting.
And you went to work for Anchorage Digital. Am I fast-forwarding the story a bit too fast?
Yep.
He got poached. He got poached.
And the same company I ended up choosing as the tri-party solution for Wells Fargo is the company I went to. So I joined Anchorage Digital as an early employee, and was the head of banking and capital markets at Anchorage Digital. And the company was not as well known as it is today, and became a part of that company as it went and became a unicorn where it is today. And I was with Anchorage up until the end of 2022, and I recently, as you mentioned, joined XDC, and so that brings you up to date.
Yeah,
long-winded story, but that's
journey, right?
That's my history, and what brings you up to speed on where I'm at with crypto.
So you've just flown in from the US. You're obviously US based, and as you said, it wasn't that long ago that being involved in crypto might have led you to end up wearing orange. And here we are.
Knock on
wood.
But knock on wood.
And here we are, late April, almost May 2025, and it seems to have changed a bit, the world in the US. So given your almost inside beltway position in the US, walk us through what it's felt like. And give us just a little recap of what's changed since the November election, since the January inauguration, when it comes to crypto. We'll stay off other politics, but let's just focus on crypto.
Yeah, I'll stay off other politics for sure. But I'll go back just a step further than that. Looking at this time, or the spring of 2023, which is almost 2 years ago, almost exactly from where we're sitting here. Our 2023, almost 2 years exactly from the presidential inauguration in the U.S. Crypto companies and blockchain companies, not even crypto companies, blockchain companies, digital asset companies, even companies that had nothing to do with crypto, were either leaving the United States or companies that were outside the United States were deciding not to enter the U.S. market.
Yeah.
And during that time, you may remember Coinbase famously was considering, and it came out quite publicly, considering leaving or moving its headquarters outside the United States.
Yeah.
And so that was a time that really kicked off really a period of almost kind of drought in the U.S. as far as investment and and activity in the U.S. And many people kind of mistakenly believed that was driven by the collapse of FTX and the aftermath of FTX. But that certainly hurt.
Yeah.
But the bigger damage was caused by the regulators, because when Silvergate or Silicon Valley Bank failed, Silvergate failed, Signature Bank failed, and the regulators really started clamping down. And so you had the Securities and Exchange Commission, you had FDIC, and you had the OCC, which was the regulator that Anchorage has, as well as the other large banks. All were clamping down, and they were doing it in ways that really weren't above board. And what's kind of been nicknamed Chokepoint 2.0. And if you were to go back during that period of time and you were to talk about Chokepoint 2.0, people would say that it was conspiracy theory. But now, with the testimony in Congress and people now being able to speak freely without worrying about recourse, now the stories are being told and the evidence is being brought forward where, it was real. And I can tell you from personal experience, I'm one of the people that, the number of people in the industry were debanked. I'm one of the people who was denied a bank account. So I was in that as well.
So they closed your bank account, or just didn't let you open a new one?
I wasn't allowed to open an account.
Right.
With USAA. There you go.
Wow.
And actually, there's
maybe for the audience who are not based in the U.S., you should probably just explain USAA and how you would have been connected to that.
Yes, USAA is a large financial institution in the United States, and it caters to the military.
And you're ex-military.
And I'm ex-military. I was, I graduated from West Point. I served 8 years in the military, most of that time as a paratrooper. And so...
where were you paratrooping into? Or is that classified?
Well, I served in the 82nd Airborne Division.
Right.
And my unit was going to be the unit that was going to parachute into the Port-au-Prince Airport in Haiti. Oh, wow! During that period of time, which is a whole other discussion. Jimmy Carter had one of the presidential planes, Air Force One, happens to be called Air Force One. The president's in it, but he wasn't the president at the time; he was a former president. But he had one of the presidential planes sitting on the tarmac at Port-au-Prince Airport, and you cannot have the 82nd Airborne, the Rangers, and everybody else jumping on to the airport when one of the presidential planes is there. So he blocked the airborne assault. So that's the closest that I came to doing airborne insertion, but I was also a paratrooper in Alaska as well, and have a lot of stories, including almost landing on a moose and jumping out of airplanes at minus 20 and
Oh wow!
and below. So
Yeah.
it's
So
but-
nothing short of exciting.
Yeah. So you obviously had a bona fide reason to become a client of USAA. You
Yep.
close that loop, and they were like, "Nah, you're involved in crypto, so we can't bank you."
Yeah, that's exactly what happened. And if any of the listeners want to look it up, if
Yeah.
you Google my name,
Yeah.
Ken Chapman and USAA,
Yeah.
American Banker, which is in the United States is regarded as one of the as regarded as the kind of authority on banking. It's like it's the the journal, the serious journal that bankers read on a regular basis. There's an article that talks about me not being allowed to have a banking account, and it was national news. It really came about because I have a decent social media following. So
Yeah.
when I was denied a bank account,
Yeah.
I put it on social media, and it went viral. And so USA turned me down, and after it went viral and news outlets picked it up, the CEO changed his mind and offered me an account. But the bigger thing that came out of that, and which is really good, the good part is there is this CEO of a bank, a very small bank in Oklahoma. It's
And like a community bank?
it is a
or-
community bank.
Right.
It's Citizens Bank of Edmond, and the CEO of that bank, Jill Castilla, is listed as one consistently every year as one of the top most powerful women in banking. She's managing a small community bank, but she is a total rock star. So when I was denied the account at USAA, she reached out to me and offered to bank me, and I had a conversation with her and her COO, and basically told her that, listen, I would love to bank with you. My concern is, having my accounts frozen, and also, having my accounts frozen, and she's like, that's not what we're going to do. And so really the agreement we had was, I'll help you. Any advice anything I can do as far as giving you advice, I will, because I was at, I have a banking background at the institutional level. I was at Wells Fargo, dealing with this at Wells Fargo and at Anchorage, and I can help you with your community bank. But also, I'm happy to spread the word, which is what I'm also doing on this podcast. Citizens Bank of Edmond, if you're in the U.S. That I will spread the word that you are a crypto-friendly bank, but I asked one thing, that is, if I'm going to be completely transparent on what I'm doing, and as far as my holdings and what I'm doing with crypto, but if you're not comfortable or your regulator's not comfortable, I just ask for a heads up to the ability to move my money or move my assets. And you just don't simply freeze me or lock me out like happens, across the industry in the past. And so she agreed. And I tell you what, I love banking there, and it's the best thing. Yeah, I love it because like when there's inclement weather, they had there was a snowstorm.
Yeah.
And I got an email saying that the branch, because of one little branch, like a little branch on Main Street.
Yeah.
And I got an email saying that the branch is going to be closed. And I just thought it was great. I love it. And then my bank account, my checking account number is really short, and I love that too. And the other thing is, I got a debit card and I hardly ever use it. And I needed to use it for a purchase. And I'd never used it before, and so I went to use it, and the purchase I was going to make was over the limit. And so I'm like, okay, well, I looked on the back of it, so I dialed the number on the back. And I'm thinking, like any other bank, you dial the number, you're going to reach some customer service somewhere. No, I reached like Mary in the branch. I don't know. That's not her name. I forgot her name.
Sure,
but
sure. Yeah.
I reached a woman
In
the branch.
In the branch.
In the branch, in like the branch, in the bank,
A
right?
human being.
Yeah.
And she's like, "Oh, we can, yeah. How much? How much do you need? What is the purchase you're trying to do?" And I'm
Yeah.
like, "Well, this is the amount." She goes, "Oh, we can just bump it up for today. And are you okay if we drop it back down tomorrow?" And I'm like, "Yeah, cool." And she's like, "Okay, you can go ahead and make your purchase now." I'm like, "Wow." I'm like, it's almost like having private banking, or like being a private banker or
He makes
something.
who?
Yeah.
But it's almost like walking into like a.
You felt like you were back in the 1930s.
But I love it.
Not that we were around then, but yeah.
Customer service.
But I
One-to-one.
absolutely love it.
Yeah, Mr.
So-
Ken goes to Washington. Yeah.
But I'll talk about the bank.
You know it's going to go now that you've promoted the bank. Now there's going to be too many people for poor Mary
No,
to
I-
answer the phone.
I know. 0800 Mary. I need my
There you
debit
go.
card limit
Yeah,
raised.
exactly.
But I think,
Yeah.
On my
I'll say the
crypto
bank one more time. It's Citizens Bank.
Go on, give it to you.
Citizens Bank of Edmond.
Edmond.
But Edmond.
And Edmond is where?
It's in Oklahoma City, Oklahoma.
Oklahoma City.
Good old Oklahoma.
And it's called Edmond. Why?
It's one
Just
of
the
the.
place?
It's like a.
Like a-
it's like a suburb.
Oh,
of,
okay.
of Oklahoma City, but Jill Castilla,
Yeah.
who is she's now just got promoted.
Yeah.
To a higher level position. I am convinced, and I am convinced she's the next Jamie Dimon.
Oh, wow.
Because I'm convinced that there's going to be a bank that's going to come in, that's going to acquire this community bank, and then just like Jamie Dimon did, she is going to be the CEO of that larger bank.
You heard it here
if,
first.
And if Jill, if you're listening to this, I'm rooting for you.
Oh, I love it. I love it.
So let's switch to what's happening in DC.
Okay.
You spent some time in Washington recently, since the election, since the inauguration. What should we expect this year from the administration in terms of obviously it's a mood shift already, and we can come on to how many incoming calls you had to hire you to work for as a U.S. head or U.S. representative, but what's tangibly going to change this year when it comes to crypto, or what's already changed in the U.S.?
Yeah, I'll go ahead and talk about what I saw from really from the election in November, through really now.
Yeah, first 100 days.
And
Yeah.
it's almost May now.
Yeah.
So there was leading up to the election, there was a lot of anticipation that if Trump won the election, that there would be some changes.
Yeah.
At the Bitcoin conference in the United States last year, Trump, when he was running, for office at the conference, came out and said he would fire Gensler, and people initially thought it was kind of off the cuff because it seemed like it was off the cuff, but then the crowd went wild, and when the crowd went wild, he repeated it, and the crowd went wild even further, and and so it's like, okay, well, we'll kind of see what happens there, and so there was kind of like I would call it. When President Trump got elected, it was kind of like I would call it cautious optimism, because there's been so much over the last couple of years, especially during the Chokepoint 2.0 period. There was so much anticipation of improvement that never materialized. I mean, even Gary Gensler, as the SEC chair, he was a professor at MIT, and there was before he took office or before he became chair, there was a lot of optimism that he was going to make positive improvement, and that never materialized. So when the election happened and Trump was elected in November, there was cautious optimism, and so. There were, so that kind of, was happening. And then once January 20th hit, which was the inauguration day, and President Trump was actually inaugurated, and for people that are in the United States or people that are watching what's happening in the U.S., there was a flurry, as it still is to some extent, of executive orders. And executive orders, for people who are not familiar with the United States, that's where a president can sign an order, and the president has a certain limited purview where they can sign orders and do things that don't necessarily have to go through Congress. And so President Trump started signing executive orders, and many of those, and quite a few of those orders, had to do with digital assets, blockchain, crypto. And when that started happening, and it really started impacting the digital asset, I call it industry, for lack of a better word. And this is the entire spectrum. This is blockchain itself. This is stablecoins. Right on down the line, tokenization. Crypto. It's everything. Right on down the line. And so when that happened, it was the exact opposite of what happened almost 2 years ago when companies and projects started fleeing the United States or decided not to enter the United States. Companies and projects were making a mad dash to get some sort of foothold in the United States. And so, and it's still continuing now. But
Can't say I'm surprised.
And you personally experienced this, right? I mean, we were chatting before we went live about just the almost inundation you had of influx of offers and approaches.
I had just a large number of crypto native companies or projects reaching out to me, interested in establishing a presence in the United States and interested in having me lead that effort. Also had a number of financial institutions, some of the largest financial institutions in the world, reach out to me asking for me to lead their tokenization initiatives, which these are companies where they had either dismantled their tokenization initiatives or has scaled them down significantly, and we're now looking to scale back up because with new regulation or with the possibility and the high probability of having a clear regulatory framework and the repeal of SAB 121, which put a stranglehold on the large financial institutions when it came to being able to hold digital assets, not just crypto, but digital assets.
Can you just explain that? You just threw out a 3-letter acronym with some numbers on, so just explain that to the audience who are not crypto native.
Yeah, I glossed over like a huge concept here.
But that's
Here
why
comes,
we have Ronit.
we have an educational checkbox section now.
Thanks for reeling me in.
That's okay. So tell us what that means. What you just said.
Yeah. SAB 121 is a huge deal. SAB 121 is Staff Administrative Bulletin 121. It was issued by the Securities and Exchange Commission under Gary Gensler. And usually these administrative bulletins are just out there to provide clarity.
Guidance.
Clarity or guidance. They're not out there to establish law or to establish something or some sort of precedent. They're really just there to provide some clarity to a law.
It's like an indicator, maybe.
It's not supposed to be anything anybody talks about. It's supposed to be just for clarity. But SAB 121 was issued, and essentially what it did, without getting too much into the technicalities here, what it did was it basically made the largest financial institutions like BNY Mellon, State Street Northern Trust, which are the large custodians, and every other large bank or publicly traded company, if they wanted to hold crypto, not just themselves, but if they wanted to hold not crypto, if they want to hold digital assets, and so this included not just crypto, but this also included tokenized assets. It included anything.
Yeah.
And because the wording in SAB 121 was not very clear, and so these large institutions were taking the most conservative approach. So anything tokenized on a blockchain was fell into this. And so what it meant was anything. So if if you held a digital asset on behalf of a customer, it was treated, and you held that in custody for your customer, which is typically it's the customer's asset. It was treated the same way as if it was an asset of the bank.
Yeah.
And so if it's an asset of the bank, then there are capital requirements that come along with that.
Yeah.
That the bank is, and again, a bank has to be solvent. And so if a bank is holding, assets that are considered to be risky assets, then they have to have a certain amount of capital to be able to, kind of held in reserve to be able to hold that risky asset.
Almost like a liability.
So what it did is it made it so expensive for the larger institutions to hold digital assets, and we're talking about any digital asset, tokenized assets, any digital asset, that it was just cost prohibitive for these institutions to do that. And it basically what it did was it shut them down.
Yeah.
And so this was with this, and it wasn't a law that came from Congress. It was it was an administrative bulletin, and the way it was communicated, or it was unprecedented. Normally, when something like that is distributed, there's a period where feedback is the SEC allows for feedback, and there's a comment period that was curtailed, and so it was really unprecedented. So basically, it was just thrown out there as a way to just shut down the large financial institutions. And so when President Trump came into office, within a short period of time, that was repealed.
Oh,
and
wow!
And so what that means is now today is the large institutions, and we're talking about like the State Street, BNY Mellon, Northern Trust, J.P. Morgan, which are all the large traditional custodians, and it's not just them. I'm just using those because those are the biggest, but it applies to all the others too. Can now get in the game, because if you cannot hold the asset, you can't do anything else. You can't trade. You can't do any of the prime brokerage services. You can't do anything else if you can't hold the asset. But now that they can hold the asset, then everything else opens up. And so that in and of itself is a huge deal. But then there's since the inauguration, a lot of other things have happened. You've had a changeover in the SEC chair has just changed over. You have a changeover of leadership, of the OCC. All of the regulatory leadership has changed over there, and they're all pro digital asset. And when I say pro digital asset, I don't think any of them are going to give bad actors a free pass. And I don't want them to. Another FTX should never happen. That there needs to be safeguards in place to prevent that from happening. There needs to be reasonable, regulation and transparent regulation. But that's what we're seeing. For example, at the SEC, they're having roundtables right now, and they're inviting industry in to participate in those roundtables. You saw that there was the White House crypto summit. I wasn't in the room for that, but I was up there in Washington D.C. at the same time that was happening. I tell you what, there was a lot of enthusiasm and excitement just because that was happening. That people were, the industry was being heard. And because in the past 2 years they weren't even being listened to, and there's a lot of other things that are happening, and even in Congress, you have the stablecoin bill, which is the genius bill that's on the Senate side that's working its way through to provide clarity around what's required to have a stablecoin, and then you have the market structure bill that's also working its way through Congress, and to provide more clarity on what is a digital asset, what is a tokenized asset, and then also to provide more clarity on which assets are securities and which assets are not, which assets are regulated, because for the listeners that are not familiar with the United States doesn't have just one regulator for securities. The United States has the CFTC, which regulates commodities. It has a Securities and Exchange Commission that regulates the securities like equities. So there's more than one agency out there. And what's been happening the last couple of years, because there was lack of clarity, there's been kind of a fight between agencies, and then sometimes a fight between agencies, and sometimes neither one of them have claimed or were claiming ownership. So you were in those two different situations where a digital asset company would be either the two agencies are fighting, or they're neither claiming ownership. And so that the market structure bill is addressing that as well. But that's both of those. There's you have Chairman Hill on the congressional side, and you have the a similar bill occurring on the Senate side as well.
Extremely positive. I mean, to your point about regulators taking action so that an FTX doesn't happen again. I don't know if you've been seeing, Ronit, that VARA has been consistently taking action against people and holding them very accountable. There have been a number of organizations, which is really positive and encouraging to see that they are really monitoring to encourage investor sentimentality and supporting the ecosystem to embrace this in the right way, even though it's moving so quickly. So it sounds overall with an ecosystem as big as the United States as it is, these things moving pretty quick now with all the information you're giving us. Wow.
And Gaurav, do you want to double click on any of these topics and
for me,
maybe get into what Ken's building next? And
yes, I'm we're familiar with XDC to a point, but what we're not familiar with, and what's great for our listeners here today is always to understand from two perspectives. One is, how can people be involved with XDC from a consumer point of view? What are the benefits, or even from the macroeconomic B2B perspective? So coming back to what XDC is, a little bit more on the road ahead. I mean, your what fundamentals you've addressed and what the path ahead looks like for both those categories of listeners.
Yeah, and maybe for the audience,
particularly
particularly the ones who are not crypto native, let's just contextualize everything.
Yes.
What is a blockchain?
Yes.
What is a layer one?
Yes.
How does XDC fit into it?
Absolutely, it's always great to do that.
There are hundreds of these chains.
Yes.
Why this one?
Well, the blockchain. I think that the easiest way to think about that for someone who's not familiar with blockchain is just think about it in terms of just information, and if you were to think about if you had your own computer and you had information on your computer, and that information is shared. That same information is shared among other computers. This is not, a perfect example. So the people that are experts in blockchain, just
take it easy.
Kind of. I'm explaining this in terms that people who aren't, experts in blockchain can understand. So just
duly noted.
Take it easy on the comments below. But if you were to, if you have shared information, between, all, different, all of, a number of different computers out there, they all have the same information. Think of it kind of, again, this is not the best example, is the one that's easier for someone to understand, that is not familiar with blockchain, but if, just take it like maybe like a shared document, like like a Google Doc or like Google Docs, for example, is you could have a number of people that are looking at that same document. One person changes it, everybody sees the same information, and that information gets gets saved, and everybody's looking at everything the same, and so with blockchain, it's distributed across tens of thousands, hundreds of thousands of computers, we call them, or nodes, and that same information is shared. But there's also differences between the Google Docs example in that when information is written, that information is cryptographically secured, where once it's written, it can't be modified, it can't be changed. And so that's kind of the core of blockchain. And also Bitcoin. People think of Bitcoin, they only think of the the price of Bitcoin or what's happened. But Bitcoin, and what's important about Bitcoin is it was the first kind of blockchain that kind of really mattered. I mean, there were blockchains out there, but Bitcoin was the first blockchain that really put blockchain on the map. And so, and Bitcoin is a blockchain, underneath the token itself. And so, but going beyond just what Bitcoin can do, the evolution of blockchain is that you had another blockchain that came along called Ethereum, which added smart contracts, and that's really a misnomer. What it did really do was allowed programming to occur, along with having this blockchain where you could have information, shared, between the computers more easily, and this opened up the possibility for things we're seeing today, like the ability to tokenize or to represent, like the U.S. dollar on blockchain, and be able to transmit that back and forth, or represent gold or U.S. treasuries or any other asset, on a blockchain, and so Ethereum became the first blockchain to be able to do that. And so, based on that success, a number of other blockchains have come about to improve, or to have different, functionality, and so, XDC was, founded in 2017, went live in 2019. And similar to Ethereum, it has smart contracts. It has the ability to be used for trade finance, tokenization, and the founders, Atul and Rakesh, they founded XDC with the intent of it being used, for business. There are blockchains that come about, and they're kind of built, a couple guys in a basement or a couple guys in college, and but XDC was really, from the very beginning, was purpose built for business, and it was purpose built for trade, and it was it's a serious blockchain built for a serious purpose, and the one of the things that that I'm excited about, and I just joined in January, and since then we've seen some really exciting things. And this is one that the readers may not be aware of, and there was a press release on this, but one of the things that readers may not be aware of is, in conjunction with Archax, is BlackRock, State Street, Fidelity, and Aberdeen, which are huge asset managers. I mean, BlackRock itself is the largest asset manager in the world. All have funds on XDC, which is huge. So XDC has made significant strides in the last 18 months. And I would just say to the listeners that are out there, watch XDC because there's a lot happening right now, and there's a lot that's going to be happening here with XDC over the near future.
Oh, that's incredible. So when you say, can you elaborate a little bit more when you say they have funds on XDC?
Yes, they have money market funds. You know, each one of them, State Street, Fidelity, BlackRock, and Aberdeen, all have money market funds deployed on XDC. But that's through Archax. The Archax is the partner that those institutions worked with, and then they chose XDC as the platform to use.
Wow. So when you're looking at that opens up a whole new line of adoption, access to markets, access for people. What if you're coming down from trillion-dollar asset managers to the other markets or businesses that are geared or XDC can benefit, what are the other use cases or adoptions you're seeing happening in different geographies for XDC today?
Well, the XDC just announced that in Brazil there's a partnership where XDC is going to be used to tokenize $500 million of assets, on chain, and so that's going to be a big uptick on total value locked, or TVL, on XDC.
And what's the reason someone would do that? Are they trying to fragmentize the access or fractionalize ownership, or are they trying to create a value storage system for transparency of information for these assets? What's the...
No, not at all. The XDC is working with partners that provide connectivity between the various chains, and so XDC is not looking to be out there on its own, and to be a standalone blockchain. XDC is connected to through third parties. And then there are industry providers out there that do this, like Chainlink is an example.
Okay.
And there's others out there that do this, that provide that connectivity. And so the reason that issuers may choose XDC is the cost. The fees are cheaper. It's less expensive, so it's from an economical standpoint, it makes more sense, faster, and then also from a platform perspective, the security's there, and then also the assurance around having finality in a short period of time. So having a good quality blockchain to work on, makes sense. But then also being able to have that connectivity out allows you to be able to have the communication, but also be able to access liquidity beyond just XDC.
Very interesting. And from a geographical point of view, we've talked about South America, effectively Latin America, different markets in that hemisphere. We talked about North America, which is what you're spearheading. Yep. What other geographies are you seeing very active relationships pre and post these announcements that have been happening?
Well, prior to the putting more emphasis in the United States following the presidential election and the inauguration. XDC was already focused heavily in the Asian market, Middle East, and Europe, and so, and it has been for years, and so that's happening and continuing to happen, and the XDC is really just continuing to accelerate. And just here this week, and as we're here in Dubai at Token 2049, the XDC is here in full force. I mean, we have at least a dozen side events that are that are fully attended, and the XDC is a sponsor of Token 2049. So I encourage anybody that happens to be in Dubai this week to stop by and the booth and take a look and see what's going on there, and see you can talk to the people at the booth about what's happening with trade finance, what's happening with tokenization, and there's really smart people and that can talk to you about what's happening with XDC. But there's really exciting things going on, and I can tell you that just from my perspective, being in the United States is kind of talked a little bit about before is, I had a lot of opportunity a lot of opportunities came my way earlier this year, ranging from the largest banks in the world to other projects, and I had my pick. And XDC is what I chose to be a part of, and after a lot of careful consideration, and I spent a lot of time because I'm very careful. I mean, I have been in did capital markets for 20 years. I've been in DeFi for over 8 years, and very careful of who I associate my name with or who I associate with, and. After doing a lot of due diligence, and I chose XDC because I think it's it has a tremendous future just because of the technology. I think is top shelf, and I just think to me they have this saying. It's certainly in the United States. I don't know how much this plays outside the United States, but it's saying that's the best kept secret. But it's certainly in the United States. It's XDC is not that well known. I'm going to fix that, by the way, because I think that getting the word out. But to me people ask me what is. What could XDC be doing better? And I'm like, just getting the word out and being more well known, I think is the thing where XDC, could be better. And one of the things that I did, after getting picked up with XDC is I went down to Walmart, which in the United States is kind of this big box chain kind of discount store. I went down and bought a bunch of oh, by the way.
There it is.
Here it is.
Representation.
Yeah, so the camera there. There you go. I went down to Walmart and bought a bunch of T-shirts, button-up shirts, a jacket, and because there's no swag. And so I went down and I know this person, a friend that has one of these embroidery machines.
Right.
And so you put the file in there. Yeah. It's actually kind of cool. You put the file in there, and you put the shirt there, and it kind of just does it.
Right.
So I went and bought the shirts, and she put it in the embroidery machine, and so I got.
You got your swag.
Swag.
I have bespoke swag.
Bespoke swag's better.
And I think this is going to be. And you know what?
Collectible.
XDC takes off one day. It's going to be worth something. And I'm showing it here because so I can prove that I had it. But one of the things is that the swag from from companies that have gone bankrupt or gone out of business, even some of these crypto companies, authentic swag goes for top dollar. Look at like eBay or some of these other things.
Yeah.
Swag goes swag that is limit that is
It's legitimate currency.
No, there is a market for this.
Store of value.
There's
of
a
course,
market for
it is.
this.
Collectibles. There's another conversation.
So I have bespoke. It only comes in one size, guys. It's like,
Very interesting.
Let's talk about the future.
Sure.
So to wrap up, as time is running short. What is if you can do this in 2 minutes or less?
I'll try.
What is the outlook for crypto in the U.S. in particular? We're sitting here. It's 2028, end of this presidential term. What does the crypto market look like? What does the crypto world look like? Do we still have hundreds of chains? Maybe we have thousands of stablecoins issued by everyone. What does it look like? A couple of minutes. Clock starts now.
Well, I think that with the stablecoin bill in the United States, it is very possible we could have a increase in the number of stablecoins being issued. We could have, and I think what happens there is you're going to see an increase in the number of issuance.
Yeah.
You're going to see a lot of stablecoins out there.
Yeah.
And it's going to be, I think, between now and 2028, it's going to be kind of like Darwinism, and it's going to be the ones that make sense, the ones that are adopted are the ones that survive, and the ones that don't are the ones that just go by the wayside. But I think that it's going to be a period of time where that's going to play out, and the stablecoin bill that's working its way through Congress, I'm confident it will pass this year. At the high level of confidence it'll pass, and that's going to bring on quite a few issuers that are going to do that. I'm trying to do 2 minutes.
That was
We'll take it. No, definitely.
so we're gonna have a lot of stablecoins out there.
Yeah.
A lot
So
of
that's what I think.
stablecoins, Yeah, and then there'll be a sort of winnowing out,
Yep.
winners and losers.
Wow.
Ken, thank you so much for joining us.
Really appreciate
we look
it.
forward to catching up in a few years maybe and seeing what that swag's worth, right? The bespoke swag.
We'll find it framed inside by Ken himself.
Yep.
There we go.
Awesome. It's been a pleasure to have you on the show.
Well, thank you very much for the invitation to be on the show. I've thoroughly enjoyed it, and thank you.